Hey everyone, welcome to Stock Talk for August 21st. So this is the S&P 500 daily time frame, and as I have been stating in the past few days, what the market is doing is climbing the wall of worry, and the wall of worry is big dramatic drop down towards the 150 period moving average, and now we're slowly climbing it. But do you know what happens in a wall of worry? The wall of worry is usually climbed up and we surpass that level. And that level comes in around, and everyone knows this, by 293.20, ES 29.35. Those are prominent resistance levels, but what's been happening in the past few days, as you can see on the daily time frame, is that we've been hitting it, and when we hit it so many times, we all know that it can break. So right now, markets continue looking bullish, and this is still a wall of worry. Let me tell you where the wall is right now. This entire wall right here is the wall of worry, and now we're climbing it. Now, obviously, we go higher slower than we go down, and that is what the market's doing. And you can imagine so much pessimism in the markets, given that we're only 3.3%, less than 3.3% from all-time highs. Let's just think about this for a moment. So much fear in the markets with 3.3% off of all-time highs. Now, we always talk about the bearish case and whether I give, legitimacy, which means that if I have to shift my perspective from bullish to bearish, which is two very different plays in the markets, then I have to see some things happen, and they have to happen continuously. One scenario was, well, these are lows, higher lows, higher lows, higher highs. We have to definitively make a lower high and a lower low. That is the starting point for bears. Looking at this chart, have we even started in a down move? Can I even see a lower high yet? Honestly, not so much. If I see a lower high, what we need to see is this is the high, then we need to coil over and make another dive towards the downside, okay? And establish even a lower low. So first of all, condition one is we don't even see a lower high. Condition two is we don't see a lower low in the markets. And then I also track market sentiment, and when I hear things of a recession, how many times in 2007 did we hear the word recession and then it imminently happened after? Probably doesn't happen. So when the media, everyone else is talking about a recession, it's not going to happen. But when is it going to happen? Well, it's when the market keeps going higher and higher, all the bears jump on board, the bulls jump on board. That is when the recession occurs, but very little people will be talking about a recession then, okay? So I think that right now, just looking at this market, I think the bull market still has a lot of ways to go. Choppy grounds, obviously, this year, but potentially more opportunities up ahead. So again, we'll take this. If I see some signs or developments of us coiling over and we make multiple attempts at reaching the highs and they start failing, it'll be a different story. But 3.3% off all-time highs and telling me that, market's going to start doing something that hasn't done yet, that's a little bit out there. So let's take you to the 5-day, 5-minute chart. This is the S&P 500. It's choppy. You can look at these moves all the way back to 281.63, back to 293.08, and now we're back towards $293. But what's the bias here? The bias here continues to be this. Higher lows established at the 150 period moving average. I even said, when we're looking back over here, looking back at these point areas, and I said 150 period moving average, why didn't we buy in at this very area? Well, it's because there was a lot of confusion. There continues to be a lot of confusion here, and even if we make another wave lower, I still expect bulls to make a stand at over here at the 200 period moving average and the support line. We haven't even come and tested on the SPY. So even if we come down there, the bullish case is not thrown away. It's so certainly right now I can give the edge to the bulls because it's a pretty strong market given where we are situated and everything we had to endure. So, all right. Let's go into TVIX. You know, another kind of barometer I'm looking at is whether we can exceed the high of this candle. This day was 27.28, which we've mentioned multiple times in the past. In order for bears to prove something otherwise, bears must close above 27.28 or even get above 27.28. Look at the high of this candle. These are, once again, the series of lower highs showing volatility is diminishing. Look at where we are right now. This is on a downtrend. So this is downtrend. This bodes well for broad markets. Nothing changes here. And yeah, if you don't believe me, just take a look at the past videos. I've said TVIX, this is the high that I'm watching. If we exceed this high, my views will change. Look at where you're right now compared to where we were a few days ago compared to this high. Again, I'm not negating the fact that we can have another down move. Expectation is support levels will hold. All right. Crude oil. So crude, if the markets were looking like something like crude, that's something I would be more cautious of. See, if markets started moving lower and made a series of lower highs and lower highs and lower highs and lower highs, I'd be, oh man, this is a little bit concerning because this type of pattern doesn't seem very healthy. So again, this pattern is due to break out in one direction or the other, but right now you can see this line, lower high line, is still acting as resistance as it did today. And then we got some moving averages above us that has acted as resistance as well. $57.84, $59 are all resistance levels. So those are the areas to keep in mind. Crude oil still stuck in a very narrow range, I think, overall, and it's going to have to break one way or the other soon. Natural gas, same story here, getting rejected off of the 50 period moving average, so down day is no surprise for natural gas. For the bulls to show up for natural gas, I need to see many, many more days, possibly weeks, for this trend to actually change. Gold futures, here you go, same trend line, 1544, 1545, acting as resistance. I always ask this question, how come we are not able to break over this resistance? Well, it's a resistance line, so there's a technical line that we have to pay attention to. So is this chart still bullish? The answer is yes, this chart is still bullish, but you can see big move up, consolidation near the or below the resistance, and this can push higher, but we need to see it possibly consolidate a little bit more, and then if it can make that push higher and break over this level, we'd be looking towards higher prices for gold. All right, so overall, I just want to keep everyone in perspective. This to the high was only a 3.2% move, the current price, okay? And then from the low to the high is a 6.8% correction. Now, 6.8%, if you think about a traditional pullback, that is normal. 6.8% is nothing to be fearful of. When we start exceeding 10%, 12%, that's when we started. And I'm not saying that we have to get to 12% for me to really flip bearish, because I'll probably flip bearish a little bit earlier, but 6.8%. That's what really put fear in people was the way we fell, okay? But what the bulls did was, I said, remember, so for those who tune in on this day, so go back to my stock talk on August 5th, and I said this: bulls will need several more days to prove that they can hold these levels and consolidate. Now, looking back, we're at August 21st, right? And I said several, look how many days we held these levels. 1, 2, 3. I mean, several trading days. Is this bullish or bearish? All right. Thanks everyone for watching this video. Have a great evening. Talk to everyone very soon in the next Stock Talk.